Well, it has been a great year for Dover. The diversified industrial manufacturers made a big pivot toward the data center, biopharma, clean energy in recent years. Now, this stock is up 30% for 2024, thanks to its embracing of the mega trends that we think are so important. Even with today's market-wide pullback, it remains up nearly 5% since the election. So can this thing keep running? Let's check in with Rich Tobin. He's the chairman, president, and CEO of Dover to get a better sense of this story. Mr. Tobin, welcome to Mad Money.
Pleasure to be here, Jim.
Okay, so Rich, big position in our trust, and one of the reasons is because of your stewardship. You have taken a very good company and turned it into a great company that is embracing all the major mega themes that are secular in nature and aren't responsive to whether the Fed's doing this or the economy doing that. How did you have the sense to do this, and where are we in the transformation?
Okay, well, I mean, it starts, I was on the board back in 2016 before they asked me to be the CEO. So I came in with a little bit of a running start in terms of what the portfolio was capable of. I would categorize the first 3 years of my tenure more of moving from a holding company structure to an operating company structure. That unleashed a lot of margin potential that I think you can see in terms of the past performance. At the same time, we delayered the organization. We basically swept away 80% of the non-customer facing activity of these smaller operating companies. And that's great from a cost perspective. Everybody gets that. But more importantly, what allows the presidents of these relatively medium-sized operating companies to do is spend 90% of their time on R&D, manufacturing the product, and understanding the customer. And I think that is really the phase that we're in right now.
Well, you do have a specialty that I love. You want to be the #1 company in companies that don't have like the gigantic total addressable market, but you take a company like Marshall Excelsior. Maybe this is the one we could use as a way. Is that a good way to do it? Too complicated?
I think that I think that we would categorize what we do, both internal R&D and external M&A, as a reverse funnel. We have operating companies that are in very small, focused TAMs. Generally speaking, we're not competing with the heavyweights. We're competing with private companies, and we think that's a distinct advantage to us in terms of cost to serve, number one. And number two, we tend to buy a lot of adjacencies around existing positions. And so Marshall Excelsior, we've spent $1 billion plus over the last 2 years in getting into cryogenic components. It's an area where we know the customer. Right. It's highly regulated. It's precision components. It knocks everything. That's our sweet spot.
And we couldn't think of anyone else that was in the space. That's why I mentioned it. Now, also in the data center, you're in maybe the most important niche of the data center when it comes to liquids, because that's the direction. Mm-hmm. That's the direction. And there's not a lot of companies that have that expertise. We couldn't find anybody other than you.
Well, it's a big, complicated TAM at the end of the day, right? Are we talking about billions of dollars of building these centers and the like? It's kind of an interesting story. We have a connector business, which everybody thinks is a biopharma business, which has been highly lucrative of us over the past 5 years. But really what it is an engineering company that does connectors. And it had a side business that was providing connectors for liquid cooling to supercomputers, to Cray and IBM. A very, very small niche TAM, because the power requirements of supercomputing required water cooling.
Right.
Well, here comes Jensen Huang, here comes NVIDIA, and who's standing there with a product that fits right there. So
Jensen wants liquid.
Jensen he needs liquid.
Yes,
he may need cryogenics after liquid.
Well, that's what I'm hoping is that you kind of backed into that, though. You're #1 in it. But it would be incredible if it turned out to be that's the next level. But that's the only way to keep the heat down and therefore make sure that the grid isn't overtaxed.
Additionally, on the other side of it, we do brazed plate heat exchangers, which is a product that's derived from district cooling. If you think about these huge cooling packages that need to go into data centers.
But also CO2 refrigeration systems. Again, niche but powerful.
Yeah, look, I give it all the credit to the management team. A decade ago, they bought a small company in Europe. We ended up being the market leader in Europe. We saw the transition to get away from HFCs in the U.S. coming. We purpose-built or repurposed a plant 2 years ago in Conyers, Georgia, re-platformed the entire product line. And, I was on the phone today with the guys who run the business, and it's highly successful.
Fantastic. Now, you do have some dry powder.
Mm-hmm.
You also got out of a business that I think most would say, well, listen, trash compacting, kind of low tech, and you go into higher tech. So you've got money coming in. You could also sell. There's another business. I don't want to mention anyone who works at a company might say, well, he just told me that he's being for sale. But you have some businesses that you could still sell. With that dry powder, is there anything you can buy right now or you're eyeing that will make it once again an even faster growing, but again, at kind of a, less cyclical? We don't want the cyclical. Yeah,
there's a lot of ways to answer that question. I spend 90% of my time with the board of directors on sum of parts analysis of the individual pieces of the portfolio, looking over the horizon of future return on invested capital. Because when it's time to monetize something that we think is a premium to how it would trade on a comp basis, we got to be ready to act. And in the situation with the garbage compacting, we've had that asset for a long time. For a return on investment, the management team did a fantastic job there. But the fact of the matter is, on a sum of parts basis, it was never going to trade at the Dover multiple, right? So we had to act upon that. We're very popular right now with all the liquidity that we're sitting on. Two things. I think the size and scope of the companies that we'll buy will probably be the same as our track record. And the discipline, I think, that we've used in terms of valuation will remain the same. If you go look at capital allocation for us, I think it's been relatively balanced between capital reduction and M&A. We want to be on the front foot, but let's see what valuations do. Okay, so from the point of view of us as a shareholder from the Charitable Trust, I worry sometimes, is it just going to always be evolving, or eventually are you going to have the tent poles and we don't have to think that one day you'll say, you know what, aerospace is really strong, we're going to be in aerospace? I think there's plenty of adjacency space. We've already got 5 segments. I don't think anybody's going to wake up tomorrow morning and see a 6th. Everyone's kind of getting wise to what you've done here, because when the company reported, you said, look, there's going to be things that are headwinds. They're going to go to tailwinds. The China situation, don't worry about it. Beverage cans, fine. And people listened, and they bought. I mean, when they don't trust you, they don't believe any of that. People know that Rich is going to deliver. Well, maybe not Rich, but Rich's management team. Okay, fair enough, fair enough. And as we talked off air, there's always a big debate about how much transparency to give a portfolio. We recognize that ours is complex, so we just put it right out for everybody to see. Well, for us who are really, geeks and wonks about different kinds of companies and where you are and where you're going, I think it's one of the great combinations I've seen in my life. So congratulations to your team and to Rich Tobin, who's the chair, president, and CEO of Dover. This is the kind of company you need to study. You need to learn how to look at companies like this, and you will be such a good investor if you do. Mad Money's back after the break.